The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. Hope y'all are having a great and fantastic trading day, getting plenty of movement to have a little fun with, and I got to enjoy it. Got to hate when it's flat, got to love it when it's moving, and we got some movement going on right now. So let's do a quick market wrap. We got the S&P down 9 points and moving down further. NASDAQ down almost 18 right now. We got the Russell down about 8. We got the Dow down 48. We got gold is currently up almost 10 points on the day right now. And starting to get some nice little volatility, seeing a lot of ticks moving up and down right there. Looking on over, checking out silver, and it is down 0.101, so it's a nice, decent-sized move. We got copper down 0.0255. We have oil down 76 cents on the day. Right now we have corn up 7 points. We got soybeans up $1.50. Euro dollar's down 92 pips, just continuing to get slammed. We got pound dollar is up 2. We got Aussie dollar down 31. We got euro yen down $1.35, $1.36 right now. We got pound yen down 30 pips. We got US yen down 38 pips. US Canadian is up 48, with US franc up 13, all from yesterday's close. So things, like I said, they are moving and shaking. We had some fundamental news come out last night. Let's go ahead and look over that on our charts, and we'll pull it up. We'll talk about it as we go through each one of the markets. By the way, just so you know, right now, all the indices, or at least the S&P, we can go back and look at the other ones, but it went down and it hit right there. Look at that, right on that one deviation level. And so anytime that happens, you've got to be looking pretty soon to potentially tighten your stops. Now, we haven't tightened it yet because, remember, the rule is we tighten it when it goes below it, all right? And so let's go ahead and look at where that stop would be just on the S&P before we walk into each one of the news. So we had it there because it closed below this one, but it also closed below the 0.7. Well, then we had to close above it. Remember that rule? We always talk about that. So if it closes back above it, how do we use that stop? So let's look at it a little bit more. We got to find the bar that closed below it again. Right here, we can see that this bar actually closed right back below it. So that allowed us just now, just recently here, to tighten the stop right here. Just, you want to do your bid-ask spread plus a couple ticks on top of that. So that puts us at a high there at 1538.25. Add, one tick for bid-ask spread, a couple more ticks to give you a little bit of room. That's going to put you right at 1539. So we're going to have our trailing stop right up here at 1539. Okay? The market goes back above that. That's where we'll be looking to exit on a short trade. But if it continues to go on down, if it closes lower and we get a move down here to 1534 and it closes below that, we'll tighten that stop again. Now we're looking at that for the market right there. So that's what we're going to be checking out, what we're going to be looking for. Now, let's go ahead and look at a couple other things and see what we got. We got, let's see, last night we had a little bit of news come out. We had the Aussie dollar news. Market didn't move super fast on that, but let's go ahead and analyze it either way. So right here, if we go in and pull up the Aussie dollar, then here's what you're going to be able to see. Give me 1 second. Have to reopen that chart back up and reload the data on it. So let me go into my data. Make sure it is set to today. You gotta love that. You gotta make sure everything is perfect on the charts. Once that's done, we can reload it up. And I'll save my templates. And this is one thing that I love to do is always make sure whenever you're making anything on any kind of platform is go in and save your templates. So when you get them set up the way you like, and like I use different platforms. I'll use Ninja. I'll use TradeStation. But I'll use Thinkorswim. Just go like File, okay, New. All right. Then go over here and go to Chart. And then once you've done that, you can pull up, say, a currency pair, and choose whatever you want here. So I'm going to choose 10 minutes, and then I'm going to go down here and I'm going to say, the template. And by doing that, it allows me to be able to easily open my template, and I can do that on really anything, any market. I can make templates for different markets. I can make different workspaces, and almost any platform allows you to do that. So if you feel like you're always having to redo the same thing every day, and this may be one of the most basic things in trading, but it is one of the most helpful things if you are trading on a consistent basis. Even if you're not, I mean, you want to come back, maybe even more important if you're not, because you may forget how to set it up because it's been so long since you've been back, is make sure you are saving your workspaces. And like I mentioned, almost every platform can do that. And so one of the things I'll show you a little bit later, too, is I'll show you how to also save your workspace if you're working over on the Nadex platform. So it actually has the ability to save workspaces and layouts, and you can save multiple different workspaces and layouts. So right here, let me load up Aussie dollar. You can see that, and we'll notice it's moving on down. But let's go back and look at last night's news and what was happening. So what do we have in the news last night on the Aussie dollar? Well, in the Aussie dollar, what you can see over here is that at 8:30 we had the monetary policy meeting minutes come out. And so if we come on over here and we look at that, that's going to be 10, and then 8:30 right here is where we started out at. And it took a little bit of time. So, it went down, it went up. And basically, if you would have done the really short expiration, like the 9 o'clock expiration, you probably would have got out somewhere pretty close to break even on the trade. Now, if you would have done the 10 o'clock expiration, you could have made some decent money. If you would have done the 11 o'clock expiration, so you actually would have had a nice, solid, 1-to-1 or higher profit on that trade. So if you can get more time, and it doesn't cost you a lot for the time, you want to take advantage of that. And but I mean, break even, making a little, or making your full target goal, even if you had a small loss depending upon where you got out, but you should have had at least a break even or better trade. If you did any of those scenarios, then you can tell that obviously was a great, simple, easy trade to do. And you just set your take profit on, especially if you're choosing like the 11 o'clock and, it's only 8:30 and you don't want to wait around for 2.5 hours for the thing to play out. You just know, hey, this is where I'm going to take profit. Just put it on there, leave it alone, walk away, let it do its thing. And you'll be amazed how well that can work out for you. And it's nice, you get to just go and enjoy the rest of your evening. It only takes about 15 minutes to place a trade like this on any one of the major news reports that we talk about. Now, if we go on in, now we had some other reports. We had a very early AM report right here at 5:30, and we can see that the report did not do much of anything. The CPI came in as expected. Now, the PPI on the pound came in much better than expected. It was offset a little bit by the RPI coming in just a little under expectations. And then the core CPI, the HPI, the PPI output, those three numbers were minor, so they didn't have a big impact. So it decided to take its time. Well, you still had time to place a trade, and you could have had an excellent trade. Again, this trade would have been best served by a little bit later expiration. If you would have went into the 5:30 and there was very little movement, you would have chose a 6. Well, it wouldn't have done anything for you. What if you would have chose the 7? Because you should have chose a 7. Well, if you would have done that, then you would have had plenty of time when it flew up here and had a nice move on that and expired right back all the way down. So you definitely would have you definitely obviously would have wanted to take profit on that trade. But if you had your take profit order pending, you would have had a good chance to get in and make a little bit of money on that one. Not as big of a move as we'd like to see off some of the news announcements, but at least enough volatility that you wouldn't just be left high and dry on the trade. Now, what about this morning? Well, this morning we had the USD CAD report, and I'll go back over. I'll show you the pound dollar. So we got the Aussie dollar there from late last night. Let me pull the pound dollar up over here on this screen. So on the pound dollar, we can see right there, 5:30. We got the movement. Again, I like to see the movement go faster, but it actually took about 15 minutes on this trade. But it went far enough. And if you chose the 7 a.m. expiration, you had plenty of time. At 6 o'clock right here, you'd have been just pushing it. I mean, it finished around that high, so that would have worked. But so 6 or 7, I guess. Let me back up on that one. 6 or 7 would have worked out for you, and you would have had a nice profit on the trade, I guess, on either one. I like it. If I can only take on a few more pips risk, which a lot of times that's what another hour means, it's just a few more dollars risk, and I can get another hour of time, I like that. So who of us doesn't, right? So, but if you had your profit in there, and it's a very simple formula. One, I want to stay within the deviations. Okay, so pretty simple. I want to get as close as possible within the deviations. The second thing I want to do is I want, ideally, my take profit to be at a 1-to-1. So whatever my risk is, let's say my risk is, $15 on the trade. And let's say I have, let's say $8 of risk on one side, $7 of risk on the other. Well, then I need to have $15 plus $8 on the side that, has $7 risk. So because I got to consider the other side's going to lose. So if I saw the short side, let's say, hey, $8 risk, and it was going to fly up, well, I need to make that $8 back, plus I want to make the entire 15 I initially put at risk. So 18 plus, 15 plus 8. Now if it flies down, and the long side had, say, a $7 risk, then I want to make the $15 plus the $7. So I'm going to put my take profit, say, 22 pips below, or say 22 pips above. And as you can see right here on this trade, on the 530 trade, the market was right at, let's see, closed out right before the 530 report at 50.81. And then, it flew all the way up here to as high as 51.35. So, you're talking 50 pips, more than enough room to have an excellent, profitable trade right there on the pound dollar. That's the one I said to focus on for early in the morning. And then this AM, so, right before the market opens, we had another report. We had the USD CAD. So let's go check that one out, see how that one would have looked out for us. And there we go. And USD CAD it moved a little, you could say, right? It took a little time. And that's one of the things, I tell people, like, hey, get as much time as you can if it's not costing you too much money. If it's costing you too much, then it may just not be worth it whenever you're doing the trades. So, USD CAD is one of those reports you can always, I like the trade, and so I'll go in and take advantage of. And there's a lot of different reports that we can take advantage of on, different days, obviously, of the week. But let's see, right here, pull this up. And so 8:30, you can see right there we had the report. It took off, moved up 1.5 deviations. So if you chose the 9 o'clock expiration, you could have got out right here. You'd have made a small profit. That's probably what you would have done if you were watching this trade. It's just taking its time. If you'd have chose the 10 o'clock expiration, which is what I did, then you basically would have had about the same trade, taking the profit off. If you chose the 3 o'clock expiration, well, as you can see, it moved not only 1, but it moved 1.5 deviations. And we started off basically at a half deviation right here. So it moved a solid 1 full deviation for you. If you would have chose the 3 o'clock, you would have had a really, really nice risk-reward trade setup built in for you. And at least you would have had the 1-to-1, which is the minimum goal of where I want to take my profits. I want to take at least partial profits at that point, if not full profit. And if you're going to take partial profit, you need to have a very good take management plan on how to scale out. If you just want to do the base hits over and over again, just do the 1-to-1. That's the easiest way to do it. All right, stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And looking at what we got. So, there's all sorts of rumors swirling around right there right now about Cyprus, and that's making the markets go haywire. One of the rumors is that Cyprus is actually considering just saying, forget it, we quit the euro. So it's not necessarily on the news wire, it's on the rumor wire. But, sell on the rumor, I guess, in this case, buy on the news. But anyway, that's one of the things that's circulating out there at the moment. A couple other things going on is they're worried about how, Russia might decide to take revenge on Cyprus. And there's different ways that they could do that with their bonds and everything else, pulling money out. So that was a big story that got released out on CNBC earlier. And right now they have a debate going on over in Cyprus, but none of the parties are going to back a haircut bill. So they're not going to go in and say, they're basically saying, we sort of realize that our houses will get burned to the ground if we rob every single citizen of their money. And so, no, we don't agree. And so they're trying to figure it out. Of course, Merkel's over going, hey, you have to do this. And they're like, no, we don't. So they're looking at other possible solutions that they're trying to figure out right now. There are over 2,000 protesters that are around the buildings and protesting all the stuff that's going on. And they have all these police trying to, keep people away. And there's different things being thrown out. They're looking at nationalizing the Social Security funds. So all Social Security funds are going in and taking that, nationalizing it. They're looking at making state property companies that guarantee sectors of the economy that both the EU and Russia will help back. So they're just literally they wanted to try the ultimate. This is simple. We'll just steal everybody's 10% in order to keep all their accounts. And I mean, I don't agree. I think it's completely wrong. Okay, I see the logic. I'm not saying I agree with the logic. Saying, hey, well, either everybody can have no money tomorrow, or they can have 10% less, or 6% less. So, but that's just not. That's their mindset. But why don't we look at why they need the bailout? Because it's not the depositors. That's the safety money. And especially like the $100,000 insured funds money on top of that. It's not because people deposited money in the banks that the country needs a bailout. They're not looking at why the country needs a bailout. And the fix is not taking people's money away from them that have actually been good stewards and saved it up. So obviously that's not the solution. And it's so bad that, like I said, they had the banks closed until Thursday because they're still trying to figure out what they're going to do, because they know if those banks are open at this moment that they won't have any cash in them within hours. The ATMs are already empty. And so, right now, I was looking at just, multiple different things, and there's different companies saying, hey, we'll back you up if that happens. We'll put the extra money in. And there's some bucket shop binary company that's over there that's saying, hey, we'll eat the losses. And I mean, just all sorts of crazy stuff just going on right now. And I just been looking through different things happening out there right now. The finance minister, apparently he's on his way out the door. I heard one report that he resigned. I heard another report that he got fired. I had another report that he resigned, and they won't accept his resignation because even the dog catcher won't take the job. So, I guess we're going to find out what's going to really happen. But in the middle of all of it, that's why we got trading. And it's sort of one of those things, you get the, the news is more like Monday morning, quarterbacking, going back and looking at all the plays and why things happened. And, man, if this would have changed, they would have done that would have caused this. But at the end of the day, you just follow the charts. So if you'll just follow the charts. And if you'll follow the charts, that's what you need. And so if you're in the USD CAD right now, and, I mean, you can see, though, you're right up here. You got stopped out right there. Trade's done. Let's go over and let's look at a couple other reports. We got the indices moving down pretty strong. Let's check out the Russell right here. Russell's looking like it may want to go down. It may want to touch that -1 deviation. It's already moved the deviation in the sense of from the high to the low, but hadn't broken the low deviation yet. We did just move our stop down on the Russell, and just here in the last 10 minutes, and to a just above the 937.3. So probably about 937.5 or 0.6. Having a stop right there, seeing if it moves lower and is able to go ahead and touch that 1 deviation level or not. But it is right down at it. If we go on over, we can check out the NASDAQ. And on the NASDAQ, not only did it hit the 1 deviation, it broke the 1 deviation and went on down and hit the 1.5 deviation as well. And right now, your stop on this would be right here. So just above the high of this bar, which would put it right above 27, basically 27.71. So stay tuned. We'll be right back right after this break. Lots of movement today.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And what we're doing is going through and looking at a couple of the different markets and noticing right now how the NASDAQ has moved on down and, walking into it step by step. So what we want to do next is, check out a few of the other markets, but also I want to lay out the fundamentals for what's coming up before we go through each one of the other ones. And that way I can walk you through and help you get some expectations set for some potential trades over, the days coming up. So let me pull those up right now, and we'll walk through them. So for tonight, in the evening, we don't have an Aussie trade tonight. There is a Japanese holiday, so be aware of that. So Japanese holiday, they're going to be closed. They're celebrating Vernal Equinox Day. And not quite sure what that is, but that is what they're celebrating today. And if we go on over and look at tomorrow, we have another pound-dollar trade, 5:30 a.m. These have been doing really well. And sort of go in cycles. You'll have like the Aussie trades do great, and then you'll have the pounds do great, then you'll have the dollar Canadians do great. Usually 2 out of 3 of them do really well. Sometimes, hopefully one out of 3 at least breaks even. If you can do that over and over again, it works out nicely. And we got pound dollar has multiple reports coming out tomorrow. So at 5:30, so you can take advantage of that just like we did tonight, like this early this a.m. And then we can go in and we can look at the, they're going to have another announcement at 8:30, the annual budget release, but I would make my main focus the 5:30 report. And so you basically could do a 6 or a 7. Remember, with that 7, you get more time. Or you could do a 3 o'clock at binary would be the other choice that you'd have available to you. Now, so if you did the binaries, you'd be looking at a strangle, which is 2 binaries, a higher strike and a lower strike. If you did the spreads, you'd be doing a straddle, which is where the floor and the ceiling are touching each other. And so the way that you do that is you go in, and I'll show you real quick. You just go over here inside the members area at TFNN for the Diagnostic Box Spread Analyzer, and you just pull up, any market you want to. So you go in here and you say, okay, I want to look at the, the pound dollar. And then you'd say, I want to buy and sell, and probably put your risk at 1-to-1 and your maximum risk at 100. Well, now you have the available possible choices. And so it shows you right here that all these are expiring at the exact same time. And yeah, it is great to have a trade that's going to, have $300 potential, wider, more potential profit. But if you know you're getting out at a certain price, it doesn't really matter. So you want to make sure you go for the lowest risk trade as well. And so you want to line the two up and look at them and go, okay, well, which one's really going to work best for me? Which one's more on the line? Well, that one you can see actually can have a lower risk than the other trade simply because it's actually closer to where the market's at. If I choose this one thing you'll notice is the market's lower than the strike. See right there? So it's sort of in the money on one side. That's why we have 23 pips on one side and we have 3 pips of risk on the other side right there as far as break-even distance movement, because it has to, basically it's pretty far in the money. So we're out of the money. So this one right here, it has to move down a lot. It has to move down 24 pips just for this one to get to break even. So I don't like that one as well. It may go up a little bit higher. And look at this one. It looks a little more balanced to me if I put these two together. And notice I can build my straddle right there on the screen. And this is live data. And once I know that's the trade I want, it's pretty simple. I just click on the buy button or the sell button, and then it will open my ticket for me immediately in the Nadex platform. So again, I just click buy, and then I can also click sell, and then instantly right there, I have, like I said, both of the tickets pop up. Let me open one more for you. I'll put them both right there. Right in there you go. So now you have your sell ticket, and you have your buy ticket. So you can buy and sell, and do it very quickly, very easily, versus coming on over here to Nadex and manually opening up each one of these to figure out which one is which. So you're going over here and you're like, okay, well, I want to trade Forex spreads, and I want to trade pound dollar, and okay, now I got 9, 10 different spreads I need to look at and see which ones are going to be the best ones. You got to open each one and you got to do the math, or you got to open each one and keep track of the math. And you're like, well, that's $390 a risk. That's too big. Okay, so you're going through each one of these manually one at a time, or you just come over here in a matter of a few seconds, you easily find the spread and you click buy sell. So sort of one of those things. Time obviously adds up really quick. One good trade that you getting the best trade can make the big difference, because it could turn a losing trade into a winning trade by choosing the right strikes. It could choose a losing trade into a break-even trade by choosing the right strikes. It could turn a winning trade into a trade that's a lot more profitable by choosing the right strikes. So this helps you not only save you time, it makes it easier, it makes it more tradable for you. And when you put all those pieces together, then you got yourself a solid trading system. You got news. What am I going to trade? When am I going to trade it? When it comes out? When am I going to put it on? 1 to 15 minutes before. How am I going to trade it? I'm going to trade it using a limited defined risk product like the Nadex spreads, and I'm going to go ahead and simply the spread scanner to help me do that in a quick and easy time frame. So what else do we have? Let's check out a few of the other different possibilities for trades coming up. We got the pound dollar, like I said, at 5:30. There is an 8:30 report. It's not a numeric report though, so I wouldn't really want to be focusing on it. And so it looks like the market is still trying to move down. And notice how those deviations just giving us plenty of room to let the market do its thing. And right now we even have the Russell. I got another chart up here. We got the Russell. So we may continue to move each one of these down. And right here, let's see, what else do we got coming up tomorrow? At 2 o'clock, we got the FOMC statement. Woo! So FOMC economic projections, FOMC press conference, federal funds rate, all happening basically right around 2:30. Expect the market to move a little bit in the morning on the open, of course, depending upon especially how this whole Cypress deal works, and then expect it to go very quiet after about 10:30. Okay? So you may get like one last bump off the oil inventory report, and then expect everything to get pretty quiet for a couple hours. And after that, all right, then we can go in and look at doing some potential trades. And we're going to talk about those on the show tomorrow and some different ways that you can set up FOMC trades. And there's a lot of different ways to trade the FOMC, so we'll talk about a couple of them. But, what product can you take advantage of? Can you use gold? Is there a way to trade gold on the FOMC on Nadex? Because most people forget there is one possibility that you actually could use to trade gold on Nadex. But is there something else you could use? That, what's the highest moving currency pair? Things like that. So we're going to go through, we're going to analyze some of that tomorrow on our show. And Fed Funds Day, right? And see if we can take advantage of it. And that'll basically wrap up Wednesday for you. And then going on in, there's not really anything going on Wednesday night that's, major. So we can go on over to Thursday. On Thursday, we're going to have the the French flash manufacturing PMI. That'll happen at 4 o'clock. Usually that's not a major market mover all by itself. What does move things more usually is the German flash manufacturing PMI. So unless the French one is drastically off, usually that German one is going to be better. So you may want to wait for the French one to come out and then look at possibly playing the German flash manufacturing PMI at 4:30. And, so you'd be looking at a 5, a 6, or even a 7 a.m. expiration on that trade. Now, also note that at 5:30, you're going to have the pound retail sales numbers come out. So that's another report for you on Thursday morning. And, of course, that could obviously is going to have an impact on the euro somewhat, even though it's a British report. And so that number could spill over into your German flash manufacturing PMI if you're not already out of the trade by then, going for that 1-to-1 risk-reward ratio and then doing a reset and going again at 5:30. Then looking forward a little bit, we're going to have 8:30 on Thursday. We're going to have a core retail sales trade, USD Canadian, and those have been working out really well for us. So USD CAD 8:30. And coming out at the same time as unemployment claims. What else do I like to play on unemployment claims? I like to trade gold. So I'll be looking at gold, and I'll be looking at a US CAD at 8:30 on Thursday. And then going in a little bit later, we're going to have existing home sales and the Philly Fed Manufacturing Index. And so let me take a look at those for you real quick and see what do we have on those reports for what we could trade. A lot of times it's been coming up as USD yen lately. We're going to pull it up and see, out of all of them, what do we see the most consistent movement on what pair has the, basically the highest movement during that time over, so like the last, 6 months or so. And so right now as I'm pulling each one of those up and looking at them, I'm seeing USD yen, Aussie dollar, euro dollar, euro dollar sort of waning off, USD yen and Aussie dollar staying up there, USD yen staying higher over and over again. Almost every time the USD yen is actually outmoving every other currency pair on US dollar reports. So just knowing that over the last, 6 months of releases, I'm seeing consistently, there's a few times where you may have had another pair, outperform it, but the biggest aftershock has really been seen, over 30 minutes past the report, has really been seen on the USD yen. So on Thursday, the 10 a.m. report, the focus would be USD JPY right there. And that would wrap up Thursday for us. Not any major reports coming out Thursday evening, afternoon there. And then going into Friday, we have the German IFO Business Climate Report. That's obviously an EU trade that you could look at. The euro dollar's had volatility all week, so straddled all you want, it's going to move, right? And so pretty much what's been going on. And so you're going to see consistently over and over again the euro dollar has had, euro yen's been also a good pair on that. So you could trade the euro yen or the euro dollar, either one of those on that report. I like the euro dollar just because it's easy to get the information that I want on it, such as the implied volatility. It's hard to get, really liquid options on euro yen, being a cross currency. So therefore, that's why I don't have the deviations on them, because I want liquid options so I can get accurate, accurate implied volatility. Trying to get the right word out of my mouth there. Get accurate implied volatility so I can get accurate deviation levels. All right, so we got all the markets pushing on down over here, and even got the Russell really pushing down pretty tight. It looks like, it's right there. So most of our stops are about in the same area, but this one has moved on down a little bit further. So as we did bust through the 1 deviation level there over on the Russell. And then let's go back and take a look at the S&P after the most recent down move we got. And let's see here. Let me load this up. And what we'll see is right here we got the S&P still with the stop right above the high here, which is going to put us just above 1530, basically 8 or so. At 38.25, so just right above this deviation level at the current moment. Now, if this bar does close higher and then another bar closes lower, we'll be able to put it on the bar that closes lower and move it down again. So right now we're still up here, still giving it a little bit of room to breathe, but it's at the 1 deviation mark right now. This really is as far as we expect the market to move on a daily basis. It's 68% of all movement is expected to be contained within a 1 deviation. There are many days that we do see the markets break out of those, but there's not many more days, meaning that 2 out of 3 days we're really expecting the market to stay within this 1 deviation range. So we're sort of at the ideal profit target range for this. Now, could it move further? Yeah, this is all going to be about what news comes out today and if it keeps moving. But I definitely have my stop right here, and if you want to go for some more, I mean, right now there's about 4 more points you could just take off the table, or you could go, you know what, hey, maybe we'll get 4 or 5 more points on top of that. So you may decide to wait it out, and this is the simplest method to do so. Looking on over, let's check out the oil. Right here, we'll load that up and be able to see what's going on with it. And what you can see right here is on oil, we're able to see, obviously it's past the 1 deviation, moving down to the half deviation there, but we have our stop right here. It's right above the high on oil on the short side. So if you're short, you're looking at around 93.40 is the high, so add a tick or so, plus a couple ticks, 93.43 is where the stop's at, and that's just above 1 deviation. So if you capture that, that's great. But if it keeps moving down, then you have the potential to make just a little bit more on that trade. Now gold, let's go check it out. Now the gold pits have closed, so gold over on Nadex is closed except for the weekly binaries. So we'll be talking about that a little bit more tomorrow. But right over here we can see gold right up to 1 deviation. I mean, just a perfect move, and did that right into really the close of the gold market. But we can see right here we would have moved it on up. Actually, probably would have been out a little bit sooner, simply because we had a stop right there. It came down. Would not have hit the stop if you had that 3 ticks on. And then we had 1 more move above it. So we actually would have got to ride it a little bit longer right there. And then, of course, we had a stop here that we moved up on that one. And so, looking at all these reports right here, I mean, you actually may have been out pretty much right on the close. It would have came down and closed out right around 0.7. So if you didn't decide just to get out at 1 deviation because you were happy with it, then pretty much at 0.7 when the gold closed out, you'd be out right there, just depending upon how you place the trade. Either way, great trade, and again, day after day, deviations calling it. Not only are they calling the oscillation points, the pivot points you could say, but they're also calling the expansion. How far is the market going to move today? If you want to know, get access to those deviation levels. All right, have a great day. We'll be right back after this for another commercial break, or actually have another commercial break, and we'll be right back after the break. 1 more minute.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, here we are right back at the Diagnostic Trading Hour, checking out a few more things before we wrap up for the day. We got gold, the mood, nice solid move. We'll go ahead and look over at a couple of the other metals as well. We'll pull up copper, we can pull up silver. We can see copper move down right before the copper pits close there, right there to one deviation. And they're just sort of hanging out right around that area now that they've closed down, but perfect move on copper. And if we go over and check out the silver markets, then we'll be able to see silver, it moved down 0.5, basically almost touched 0.7 there, but then up 0.5. You got a one deviation move from top to bottom. Didn't get a move up to the one dev level. But remember, whenever you go down to a 0.5, you pull that back up. That's -5 plus +5, in this case, equals 1. So you put the two together, not 0. Then basically, as far as the distance of movement. And we can look over at a couple more things. So let's see. Let's go ahead and check out. We looked at oil a little bit earlier. We can see where that's sitting at right now. Still working on moving down. Oil is going to close down here in about 30 minutes. And but it's moving on down right there to that 1.5 deviation. So still keeping the weight on it. Looking on over at natural gas. We got natural gas settling out at 1 deviation here in the next few minutes. And so doing perfect right there. I mean, just a deviation move across the board. We're seeing everything moving perfectly. And if we go on down, look on, we'll look at corn, see if that pulls up. All right, so we got corn right there. Went up to about 0.7 before it decided to pull on back. And, you know, not a whole lot to say about corn right there, but it did move. And we'll go on over. We'll see if we got soybeans loaded in here. I'm going to go ahead and put, I don't think I have that one built into my chart right now. I haven't been trading soybeans a whole lot lately. And we can check out a couple of the other currency pairs that we haven't reviewed yet. So we can go in and look at the U.S. franc. See where that's sitting at the day right now. Moved down over like early this morning, actually, looks like. So we didn't have really much of anything going on. But then it moved on down into the morning, down to -7. But decided, the dollar decided it was going to go ahead and rally. And along with everything else, rallied on up 0.7, 0.5. And working on getting to that 0.5 level up here. But this move to this move, or just looking at that right there, that's obviously a solid 1 deviation move. So basically this is about, you could say this is easily 2/3 of the move to 0.5. So this is 0.7. So you put that all together, you got a solid 1 deviation move up. And I'd be looking to be pretty careful at this point if I'm long on the U.S. dollar franc. Looking over at the USD Canadian. So checking that out, got a solid 1 deviation move where it hesitated. It's up at 1.5 right now, looking like it might even want to go on higher to 2. So with everything, the dollar's just really trying to gain as much strength as it can. But I think at this point it may start to exhaust itself. So we should see things slow down, pending any further major news coming out of the markets. And looking over here at USD yen, so we had the dollar yen. It ran on up to a 0.5 deviation, basically late last night. After that, it fell back the 0.5 and another 0.5. So from top to bottom, we have a solid 1 deviation move on the USD yen. And across the board, looks like things are sort of flatlining at this point. And I'd be looking to start taking some profits off just about anything that I had on if I didn't at least tighten my stops. Because I'm not just seeing a whole lot of movement. I think we're at major expansion points. And it could be easy to see a little end-of-day pop or rally, just depending upon, remember what happened yesterday? We had that massive fall. Things rallied on back up. And not that it was, a great day, obviously, in a lot of ways, but it did move on back up. Do I think we're going to move all the way back up on all these things today? I don't think so. But would I want to give away all the profits if we do? Definitely not. So definitely tighten your stops. Manage your profit. Use Nadex to manage your risk. Manage your profit. Use the deviation levels to help you do that. All right, I hope you all have a great day, a safe day. I will see you tomorrow, and stay tuned for another great show right after this.